Today we are looking at Walmart Inc. ticker symbol WMT, and they are up almost 4% in the pre-market to $137 a share and 45 cents. The reason for this is they have just released their earnings for Q2 and the market is taking pretty kindly towards them. So what I'm going to be doing today is going through these numbers, then taking this to my discounted free cash flow model and Buffett Graham intrinsic value models to see if this stock is a buy or a sell. So let's just quickly talk about what's been happening with Walmart's price. If we go to the last year today, it's actually down 8.33%. It got to all-time highs of around about 156 and then had quite a big drop off. But this is one of the largest drop offs Walmart has had in quite a while. If we look back over the last 5 years, we haven't seen something similar to 2018. And let's see if this is a good buying opportunity. If we compare this to the broader market, which is the S&P 500, you can see about the same time Walmart is being beaten by the S&P 500 68% to 76, but it is pretty neck and neck over the last 5 years. So let's have a look at the earnings. We have the 3 months ended in 21 here and the 3 months ended in 22 on the left hand side. So firstly, we want to look at revenues, what's been happening with revenues. And as we can see, the net sales is up 139 billion to 151. And the membership and other income is up pretty drastically, 1.2 billion to almost 1.5. Overall, these are up 8.4%. 144 billion to 152 on the quarter. Next, what we want to do is look at the profit. And if we scroll down here, you can see that we have the consolidated net income and profit is up 20%. 4.2 billion to 5.1. So how do we get the profit? Well, it's revenue minus all the cost and operating income and things like that. We can see the cost of sales is up 10%. And the general up and admin is up 5.8. So the cost of sales is up, but they were able to generate another 11 billion when it's up about 10. So that's why the profit has increased. Next, we want to see is the shares outstanding. Are they buying back or issuing more shares? And Walmart are buying back their shares. 2.8 billion to 2.736. Why is this important? Well, if you own 1 share of Walmart and there are 10 shares, you own 10%. If they keep buying back those shares to now there's 5, you would own 20% of the company. Now, if we just scroll up to the top here, you can see that the returns to shareholders and share repurchases, dividends 1.5 billion. And they are doing almost 3.3 billion in share repurchases. So they are going to continually buying back shares and rewarding investors in Walmart. Next, we want to look at the free cash flow. Now, this is the 6 months ended, 2021 to 2022. And we can see here that free cash flow is cash from operating activities minus CapEx. Net cash is 9.2. Capital expenditures is purchases of property and equipment, 7.4 billion, quite high in CapEx. CapEx is increasing. We don't have to do the maths because Walmart is very nice and they've added at the top. We can see that the free cash flow for the year to date, which is the last 6 months, is 1.7 billion. Now, if I just take this to my summary sheet here and we'll just show all the numbers, what does that mean in terms of P ratio? Well, P is about 21. Revenue for the last, this is the trailing 12 months, is up compared to 4 years ago. Profit is up. They're buying back their shares. Free cash flow, they had about 4 billion in the previous quarter and this, the previous 6 months prior to this. So free cash flow is down at about 5 billion. So only 3 passes. Free cash flow ratio is very high at the minute, 71, but this is due to the high capex and what's been happening recently. Total dividend paid 6 billion, and with free cash flow, this is a problem in the current year because they're using free cash flow to pay for the dividends. So this is a bit worrisome at the minute, but the free cash flow has decreased compared to previous years at Walmart. So what we've done here is we've calculated the future free cash flows based on the averages of the company over the last 4 years, and we're going to discount them to today's value and give a value based on discounted free cash flow. So firstly, what are we seeing? Well, the initial price that it's calculating is $168.40 a share. Now you can see here, this is with 16 billion in free cash flow over the coming years and increasing from that. So let's firstly have a look at the revenue growth rate. We've got about 3%. I would say this is fair. Analysts are expecting about a similar growth rate as well. So I wouldn't be too tempted to change this number. I think that is a fair estimate. Next, net income margins. I think this is a little bit on the low side. Walmart have been able to increase their net income margins by, well, increasing, obviously you can see they've increased over the last few years, and obviously they've got services as well. So let's just increase this a little bit, not much of a change, and that puts the stock price to 186. And finally, what we want to do is look at the free cash flow growth. Now, in the last 2 years, these have been declining free cash flow. If we were to take an average based on the more recent numbers and put this down to 36% and say free cash flow is going to increase at the previous numbers, $52 a share. But I don't think that is the case. I think we're probably going to be closer to previous numbers. So let's just bring this down a little bit, a little more conservative once again. 11 billion increasing, $111 a share. I think this is a more fair estimate based on 2019 and 2020 numbers. If they can keep increasing their free cash flow, this stock does look like a buy. Next, we want to look at the Buffett Graham intrinsic value, earnings per share, and expected growth rate. So let's just quickly have a look at what analysts are expecting in terms of growth rate. If we go to Yahoo Finance, you can see that over the next 5 years, 10.35%. So we've already added that in. And the bond yield, which is a AAA rating, 4.06. So we've added that in, and let's see what this gives us in terms of the Graham price. So fair value has them fairly valued at $147 a share, and the Graham price, which is it is a 25% margin of safety, as you can see here. Buy and hold price forever, really, and you can see that that is got it valued about 110. So fair value is saying it is undervalued at the minute, but not by much. And if we compare to what analysts are saying, high side over the next 12 months, 170. Low, they're saying 110. Average, about 145. So the Buffett Graham intrinsic value and the analysts seem to be pretty much neck and neck on the stock, with the discounted free cash flow model liking it a little bit more. So overall, models are saying it's a buy. But they need to keep on increasing their free cash flow, because if it goes down to 2020 levels, and as I said before, if we bring this number down a little bit, even 90%, it would put it at fairly valued. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. Oh, actually, sorry, one quickly other thing. I just wanted to see that they have some of the guidance here. Consolidated net sales growing about 5%. Comp sales, excluding fuel, about 3%. Operating income decline of about 8 to 10%. Adjusted earnings per share decline as well. That is the third quarter. And if we go to the fiscal year of 2023, they're expecting net sales to be about 4.5%. The company means its expectations for Walmart comp growth sales, excluding fuel, of about 3% in the second half of the year. For the full year, Walmart expects comp sales growth of about 4%. Adjusted earnings per shares, once again, are expected to climb. So that is some of the guidance. But overall, if we look at the share price, where it currently is, the market still is acting pretty favorably, up 3.7% in the pre-market. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.